First and crucial step in understanding what the hell is going on in your business financing is to separate your bank account, your personal life bank account, and your business bank account. Now, this is something that most freelancers don't do. And to be honest, I didn't do it for at least 10 years. And that's probably because most freelancers start off as just, some kind of a side hustle, something that they do part-time while they're doing other things. And so it doesn't make sense. They don't treat themselves as a business. But as you're moving along into becoming a full-time freelancer, you want to change your mindset and you want to understand that you are now running a business. And so you need to treat it as such. And it's still a lot of people who have gone to full-time freelancer, me included, by the way, for a lot of years, have still kept managing all the money that coming in from clients and expenses for the business coming out from their personal account, where they also pay their rent and food and stuff like that. Now, here's why it's crucial. First of all, it will really, really simplify the tracking of what's coming in and what's coming out. When you have to start going through your expenses and start thinking about, wait, this was a personal expense and this was a business expense, it just makes the process so much more complicated and time consuming. So the first step is, once you have a dedicated account, and usually you can start it off very cheaply, it doesn't cost a lot of extra money to have a different business account. By the way, it doesn't have to be like legally, according to the bank, a business account. When I got started and I didn't register, well, it's different in every country, but I was basically running kind of a personal business. In the US, you might call it LLC. It doesn't mean that I had to open it was actually just a personal bank account, another personal bank account at the bank, but it's just different bank accounts. So don't be fixed into the statement of it has to be a business account, but it just needs to be a separate account. And by moving all the business expenses and revenue into there, it really, really simplified the keeping track of actually what's coming in and what's going on. Now, once you do that, you have a very, very easy visibility into the bottom line. I mean, you can always look at how much money is in that account to know how much cash you have. When it's combined with your personal either saving or expenses, you're really not sure how much money the business has, because you might have used it for some kind of a personal expense or something, and it's always changing. So you never really know what's in the business, what's the status of the business. Okay? Now, one of the first things that will happen once you separate the bank account is that you'll start pulling in a regular salary payment for yourself. Okay, you're going to set that at a specific number that is required for you to, keep your standard of living, and you're going to transition and transfer yourself that money no matter what happened that month. So if you had a big client paying you a lot of money, you're not going to transfer all your money into yourself and just spend that money. You're just going to transfer the salary and keep the rest of the money in the business account. And that will create a buffer which will allow you to pay yourself consistently even if 1 month you didn't have a client, which is something that's very, very normal and actually okay, because that's how the business cycle of freelancers work. Okay? Now, this will help you. Having it separate will help you to deep into your home savings, because, as I said, it will be very easy for you to understand actually what money do you have also for yourself in your personal account, and you'll know not to use money that you don't have. What most businesses do is that they get some money, maybe personal money, and they'll use it for a business expense and the other way around. And again, that will just mess up your finances, and at the end of the day, you'll be left without money. Once they are separated, you can make wiser decision as to what expenses you want to make. And the last thing, but it's very, very important, is it's going to set you up for growth, because once you have a different account, you can delegate it. You can give your accountant or bookkeeper access to the account so they can manage your finances without having to, give access to your personal account. And this is very, very important, because maybe one of the first things that you're going to do is actually delegate keeping track of your finances to somebody else, which is basically what I did, just because I hate keeping track of the numbers and doing all the work yourself. But if you run that in your personal bank account, you're not going to be able to do that. So it's very, very important.